Good morning, good evening, or good whatever time it is you are listening to this. I'm going to be going over the datasets, earnings, and the SPY for March 7th, 2025. And I apologize if I sound tired in this video. I've had a really long day, so I'm going to try to keep this video fairly quick. With that said, let's go ahead and jump into the datasets for today. So today's an extremely important day as we have the non-farm payrolls. I always call this the NFPs, so if I refer to that, that's what that is. So we have the NFP data, which is extremely important for the market. Um, they're expecting an uptick in that, which that kind of fits the narrative of the labor market not failing and everything right now, and the labor market seeing increased strength. So very likely that is going to come in consensus. If that doesn't, then very likely the market will rally really hard because the NFP is going down suggests that the labor market is struggling. So that helps the rate cut scenario significantly. So we also have many important other data sets today. We have the unemployment rates, just the unemployment data in general, the participation rate. Basically, the big data sets today are the unemployment rate and the NFPs. Uh, I don't know what to expect out of the unemployment rate. We did get the downtick the last two reports like I expected, um, which I don't know if we're going to continue seeing a downtick. Very likely we're going to hold within this consensus of the 4 to 4.1%, give or take. Not too worried about that. I don't think we'll be seeing a 3.9. If we do see the 3.9, very likely the market will drop off the face of the earth because that's it. That's basically saying that jobs are going up or employment is increasing. So um we also have some really important speeches later in the day. So earlier in the morning, we have Bowman speaking. I don't really care about Bowman's speeches too much. We have William speaking. Again, I don't really care about his speeches too much. The second really important part of the day is when we have the Congressional Fed Monetary Report, and then Powell's going to be doing some sort of congressional testimony on that monetary report. So if we're going to get some major market decisions today, it's going to come from the unemployment rates and the NFPs, and then when we see whatever this monetary report has to give us, and very likely when Powell starts his testimony. Uh, I have no clue what this testimony is going to bring too much, but just always be prepared for volatility when Powell's speaking. And it looks like at 1:30 as well, we have President Trump speaking. I have no clue what he's speaking about tomorrow or today, I mean. I have no idea. So we'll just keep our eyes and ears open for when that speech happens and see what he starts discussing. Now, I know there was the pause in the Canadian tariffs. I don't know if there's anything happening with the Mexico tariffs, if there's going to be a pause in that. I know Mexico said they had a really good conversation with Trump's team today, so that might be getting paused or it might even be paused at this point, and I just skipped that news. So just be prepared for that. That's very likely going to be happening. Now, there isn't really any earnings to go over for the day since, it's Friday. Usually there's not many earnings on Fridays. If there is, it's something in the morning, but nothing big is coming out today. So, with that said, let's go ahead and jump into the technical analysis. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis and starting with our moving averages and Bollinger Bands as always. And again, I'm just going to cover this pretty much in every video. If I say MA, that is a moving average. So if I say the MA 5, that's the 5-day moving average. MA 10, that's the 10-day moving average, etc., etc. So yeah, I'm not just being a sheep or anything, just saying MA. Anyway, let's go over the moving averages. So SPY closed at 572.71, which that's below the lower Bollinger. The lower Bollinger right now is at 574.31, and it's going to show a little different on the video's numbers because I wrote these down before the overnight session started. So, um, what the computer's going to show right now is a little different than what my numbers are going to be. So just bear in mind with that. We had the 5 mile at 582.12, and since we did have the market close at 572.71, that means that this is going to be kind of a wider range than what I usually guesstimate, but the 5 mile is very likely going to be opening around that 577 all the way to 579. It's going to be in that area. I don't know exactly where. We will see on open, but very likely that's going to be focused on testing today. We have the 10 mile at 588.16. We have the 20 mile at 597.82. But with that said, all the support is currently above us. As you can see, all the support is technically all above us right now. We have the lower Bollinger, as I said, at 574.31, and we have the upper Bollinger at 621.33. So quite far away, but that's starting to expand a lot and open up as we pull downward and consolidate in this area. Now, I want to go over, let's see, the ADL really quick. We had a pretty big dip in the ADL today, and as you can see, it's almost at that point of that really, really massive sell-off we had on Monday, but it's not entirely there yet. Now, another really important point is that today or yesterday we essentially almost tapped the 200 MA, which that's a really, really huge moving average. Usually if something taps this or crosses it, it doesn't last very long. And if it does last a long time, then that's a trend change. So for example, and I'm just going to hide the Bollingers just for a second. If we see the SPY just continue breaking down and say we get all the way to this 495 range, that 200 MA is slowly going to start pulling down, but that means we're going to be actively trading below it, which that's the bear market right there. If we get below this area and hold that area, that's the bear market. But while we're above that, we're still in the bull market, but we've crossed uh, quite a deep threshold into bear territory. And what I mean by that is that the 50 MA is kind of like the I call it the 3 month average because it's essentially you get to that range every 3 months, above or below it, and I use it as a midterm trend indicator. So technically we've been in bearish area for quite a while, for almost 2 weeks now, as we are below the 50 MA. But if we do recover that level, uh, if we do bounce off this 200 MA entirely, then we'll be straight back into bull territory, and that can happen. I know many are getting extremely bearish right now, but um, we're still not in uh, entirely in bear territory right now. Now going down to the hourly chart. One moment, I want to show drawings. Now, this is the lower consolidation channel, and there's the upper consolidation channel, just to show that this isn't some arbitrary channel. This has been pretty much holding us the entire election. So, um, pulling under this is a pretty major deal. We've only done that so far before the election. So breaking right here is really bad. But the good news about that is that we are starting to somewhat pull above this area. We're not above there yet, but we're slowly starting to pull some support, and there's a couple things I want to focus on here. And while it's going to be a little harder to see in this hourly chart, there's two really big gaps here that are important. And I want to make two horizontal rays to highlight them, because it's a lot easier to see these in the mobile version than it is on the computer. So um, I just want to focus on that. So we do have two really bullish gaps right now. And the reason why these are bullish gaps is because these can turn into cups really easily. So for example, I'll get my drawing tool one moment. If we build support above this lower consolidation channel, say we start building support in this range, and I'm just going to circle it, it's going to look ugly, but we're just going to circle that. If we start building support in this area, then very likely what's going to happen is we are going to close that gap and head upward. And what this ultimately does is this fills a bullish cup. Now I'm going to delete this liquidity zone for a moment because I want to show this cup filling out. Now, when we do fill this cup out, very likely it's going to happen. Uh, we should look for a handle, and we have a ton of liquidity built, but it can't pull down all the way again to this range. You know, if we start building a ton of liquidity right here, then we can absolutely see this handle pull downward. But very likely we're going to try to fill that gap upward. We have all of our moving averages. I can't talk. All of our moving average support is above us right now. So for example, if we see the 5 mile open at that, say let's say the 578, you know, give it between the two ranges that I originally stated, right? So 578 right here. What usually happens with a 5 mile test, you usually go $2 above and below. So if we have the 578, right, we have that range, then we're gonna see, you know, $2 above and below, very likely. That puts us right in this 580 range, and this puts us right, that's 576. So that puts us in a really, really quality range right here to um, close this gap. It's extremely likely we are going to close this gap because of that. If we do test that moving average. Now we can break down here. I'm going to highlight it, but I'm not going to talk a lot about it because I don't think this is going to play out. But if we see this rejection of this lower Bollinger, or not Bollinger, if this lower consolidation channel, then look downward. Very likely we will fill that inverse cup out towards the 570. But we could look for bearish structures to do that, and potentially we have one right here. I want to delete this inverse cup for a second because I want to show you this head and shoulders that's potentially forming. And then if this was going to break down further, you know, you just look for that other shoulder, that right shoulder to fill out, and then pull downward and fill out that inverse cup. I don't think that's the case though, so I'm not going to focus on that in this video. But again, that is the bear case. So if you are bearish right now, look for that, and then you're going to look for a handle on that inverse cup. Continuing with our bull thesis here. If this happens and say we get the lower liquidity tested in that 576 range, excuse me, as you know, the upper or the 5 mile would be in that 578 range, give or take. That gives us really good liquidity right at the bottom of this area for that handle. So if they pull it up, they can take it right back down and then have a breakout. Now the next area is this 584. Now why is this area important? Because we have the 5 mile or we have the 10 mile currently at 588. So very likely it's going to pull down on open tomorrow, probably around that 586 range, which, you know, it's right within that test range. So if we're starting to close some of the support upwards, just look for these gaps to fill out. It's a very safe way to trade this right now because the volatility has been crazy. I mean, just look at today's session alone. So here's the 5 minute chart from today, and as you can see, it's just nothing but pretty absurd chop, just up, down, up, down, up, down, up, down, up, down, up, down, up. Um, yeah, today was a pretty special session in many regards. Um, let's just look at that on the 1 minute chart. It's a absolute chop fest. I've not seen a day like this in quite a while. It was special. But yeah, we're seeing a lot of bullish liquidity upward, and one thing I did want to highlight is that we are starting to see this inverse head and shoulders fill out, which very likely we will see, um, as I mentioned before, we're going to start building liquidity in this area. And once we start doing that, that's going to allow us to start filling out these cups. We have a cup right here. We have a larger cup right here. And then we can, kind of use this previous area as a handle um, and then we have that 597 looming right there, and very likely we're gonna start seeing a lot of liquidity build upward to start taking this area. Um, I don't like looking downward when we're this far below the bottom Bollinger, and let me show you what I mean by that. Just one moment. Okay, daily chart, hide drawings, and Bollingers. All right. So why would you want to buy puts in this area and just take a look at the trends for a moment? Okay. Bottom Bollinger. We're technically right at it. Bottom Bollinger, bottom Bollinger, bottom Bollinger, bottom Bollinger, bottom Bollinger. I don't know if you can see the trend here, but the trend is that when you get to the bottom Bollinger, you generally do not keep pushing below it. It's generally a level where you claim it and bounce above it. It's not something you generally sit in for an extremely long time. This is one of those examples where you sit in it for quite a while, but even then you bounce out. And it's extremely likely that we will see the exact same situation happen here. Uh, that's why I keep looking up to the 5 mile when we're in this range. There's no reason not to. It makes the most sense to do. That's our nearest support. We have the 200 mile underneath us, but as I mentioned before, that's very likely going to bounce. So there's a lot of reasons why we can head upward right now. Um, and the supports are all kind of right in that area to land in the way where we can build support. And I wish I didn't delete those drawings of the 580 and the 585 or the 584. But once those fill out, that 597 opens up almost entirely, and that's kind of what I'm looking for right now. Uh, I don't really anticipate going down too much further. If we do go down, then look for that to fill out, look for a handle, and then down when we get to this area, then we can start looking for potentially another inverse head and shoulders to break us out. But it's very hard to be extremely bearish here. Um, there's a lot of reasons telling us technically that the market should bounce, and those bounces have a lot of gaps to fill, and because those gaps can be filled, it's very likely the gaps above that get filled. Um, I know that's kind of complicated, but essentially we should be building support in this bottom consolidation channel and slowly heading up. Uh, that should be what the case is right now, even if there's somewhat bearish news in the economy and everything. But as I mentioned, um, those tariffs are getting paused for a month, very likely. We already saw the Canadian one paused for a month, so if that does happen, that gives the market plenty of room to, push us out for, a few weeks. It's only the 6th right now, 7th tomorrow. So, I mean, we still have, a whole 3, 4 weeks in the month before people have to start worrying about the tariffs again. So, with that said, I'm gonna end the video here because I know this has been quite a long one, even though I said I'd do a shorter video. But I am looking for upward support overall. Whether it's bullish or bearish, I don't really care. That's the thesis. We should be seeing upward kind of regardless. And yeah, let's look for that. If we get some crazy breakdown, then we'll handle it from there. As I mentioned, just hedge in this area. So if we get the 5 ma today, then throw a couple puts on it. There's no reason not to. You can toss calls on it as well. There's plenty of room upward. There's no reason to try to force anything right now, especially with how choppy the market's been. You're just going to lose money left and right trying to play that unless you're a very good day trader and know how to time the intraday movement. But if you're trying to go for a longer position, I would just really wait right now. The volatility has been absolutely insane. But as I mentioned, there's a lot of reasons why we're going to see upward momentum, even if just temporarily. And I know many are looking at that large inverse cup, expecting a inverse handle to form, and very likely that could happen. But we still have to build upward to that level. So, as bearish as things are right now, we should be seeing upward momentum, even if it's for additional bearish liquidity to pull us back downward again. So I'm going to end with that. I hope everyone has not just a safe trading day, but a great weekend, and I will talk to you in the next one.